How you doing, guys? Welcome back. It's LSP. I was going to post a video going over my equipment, and explaining what it is that I've got on my screens, as I go through, a daily process, pre-market, etc. But Joe sent me a message on Twitter, which is perfect timing, actually. So this is the message that he sent in. About to dive into the next learning phase of my trading journey. I basically know enough to get by for the most part. Any suggestions? Also want to upgrade what I'm using. Is there a big difference in using a good, powerful laptop versus desktop? So, like I said, perfect timing because I can kind of go through a bunch of stuff and I can also answer this or these questions as well. So the biggest issue when it comes to trading and what equipment you should be using is it depends on your methodology. If you're a simple trader and you hold over longer periods of time, for example, swing trading, pattern trading, or even long-term investing, you don't necessarily need all of this equipment. But if you're scalping and intraday trading, and you're looking for, quick moves, the more information that you have, the easier it is for you to see, trends, to see intraday, pockets of liquidity, to see volatility, to see the volume pickups, to see volume drying up, etc. And all of this gives you a much better window into pulling the trigger when it comes to intraday trading, especially on something as fast as the Nasdaq. My advice is when you're looking to take your trading to the next level, it depends on your methodology, it depends on what you're looking to do. So even with simple trading, like, I don't know, support and resistance or moving average trading, or longer term investing, you don't need a lot of equipment. You can just use trading view in a good broker. But you also want to think about things like adding COT data, to your trading and to your analysis. COT data is very, very important. You can also look at breaking down in terms of, for example, if you're looking at the higher time frame, weekly and daily, for your longer term investments and for your longer term moves, or even swing trading 1 to 2 weeks, 3 weeks, etc. If you drop down to the hourly and the 15-minute time frames, it gives you a much better entry, and increases the ability for you to be able to reduce the risk and then also increase the size, thus making more money, right? And then in terms of adding broader market analysis, if you look at, say, top 10, NASDAQ, or top 10 Dow, or top 10, S&P, the ones that make up the bulk of the movement, on a percentage basis, in terms of strength or weakness on the day, that can also help. You can do a correlation analysis. So you look at different markets and the correlation between those markets, and for example, the cryptocurrency market and how that correlates to, the broader markets and how they correlate to commodities, how commodities affect the broader markets, and all of this type of stuff. It does take some time to get into. I don't really use correlation in that regard too much on a daily basis, but it is really, really important to start to understand a broader spectrum, of analysis, because then that can give you an idea of what could potentially be coming down the line. So in terms of equipment, if you're looking to day trade or intraday trade and you're looking to maybe trade the futures, you absolutely need as much information as you possibly can, right? And it's worth paying for that information as well. So me personally, I've got a very powerful PC. I'm very lucky in that respect because we used to mine Ethereum many, many moons ago. Many of you guys know this. We had loads of 3090s, so I've thrown a couple of those in there and I added loads of bits. I've got a Ryzen in there and blah, 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 right? It's a really, really powerful PC. You can get better now, but it's more than enough for what I need. So this is my main trading screen. You can see this here. This is what I focus on the day. This is where I do my executions, etc. And then I've got the main screen where I have, NVIDIA, Microsoft, Apple, 2 Googles. This is the A and the C, Meta platforms, or Facebook, as many people know it. Broadcom, Tesla, and Adobe, right? So these are the tops, the top stocks in the Nasdaq. And I'm going to caveat this by saying it's very easy to have all of these on your screen and have absolutely no idea what you're doing with this information, right? You need to understand what it is that you're looking for, where the pockets of strength and weakness are, because ultimately when you see a big drop like we saw on the, when you see a big drop like we saw on the Nasdaq, that doesn't really help you when you're looking at this, right? Because everything's going down all at the same time. But even just as a very surface, basic understanding of why this is important, if you look at Apple, towards the end of the session, you can see that Apple tried to recover a little bit more. Forget that it's the end of the session. I'm just trying to give you a really, really quick, and this in no way means try this, at home, so to speak, right? But you can see that Apple eased off a little bit. And tried to show a little bit of strength towards the end of the session. The same down here with Adobe. Yeah, maybe Tesla a little bit, but predominantly it's all down, right? But on the day when the market opens, this will give you a broader idea of whether these, these top 10, top 9, or the Magnificent Seven, are driving the market higher or driving the market lower. And there's instances where you'll be looking at all of this information and you might get one of them that just is just refusing to go down while everything else is getting absolutely pounded, right? Which can also be, some useful information. And then I have the third screen over here, which is obviously the portfolio screen and the order flow screen. It's a footprint chart. And this is obviously the account up here, 5,000. This is the account that we're going to be using with all of the information and, the videos that I'm going to be putting out there, et cetera, et cetera. So that's where we're at. I think it's really important, that you have the best equipment possible. I think it's really important that if you're going to take it seriously and you are going to treat this as a business and you are going to treat this, with the respect that is due to the markets, then you should be in a really, really good position, to move forward. And you absolutely need the best equipment possible. Don't buy a cheap PC. If you're going to take this seriously, get, monitors that can handle really high res, 4K minimum, because you can add more stuff onto your screen. And it's just a much smoother experience when you're trading, and try to get a PC that is one that can handle all of the screens, but more importantly, that isn't going to lag, when you've got a platform, open. When you're using trading, TradingView is really good because it's web-based, obviously, and you don't really get a lot of lag on TradingView. But when you've got loads of screens up, you want everything to be ticking, precision, right? And then going back to education, just keep diving into the market, study every price behavior. With me, when I'm looking at the NASDAQ on a daily basis, I've become so familiar with trading the NASDAQ, just like I have with cable, just like I have with Euro, that I am very familiar with their movements. I know generally what times of day they're going to get movement one way or the other. I know the price behavior. I know the little nuances that happen on these three, specifically these three: cable, Euro, and obviously the NASDAQ. And it puts you in a much stronger position when you're focused in on one asset, or a very small group of assets, because it gives you the nuances that you wouldn't see if you're looking at tons and tons and tons of information. When I was trading stocks many, many moons ago on US equities, I used to have a stock screener that I created myself. It was a very simple stock screener that would literally look for volatility spikes on open, right? So you simply can't look at hundreds and hundreds of stocks and cycle through them looking for an opportunity. You have to use different information. When you're looking at too much all at the same time, you have to filter all of that out to get to the point where you're like, this stands out, that one stands out, everything else is an absolute mess. I used to look at ETFs, for example. I've had 20 ETFs all up, and I could see, for example, on the day that, the financial sector is a little bit stronger than everything else. That's what you're looking for when you're looking at more information, right? But when you're looking to really hone in and understand one asset class, the information that you're using is the asset class itself, and then everything else that affects that asset class, right? So again, I hope this helps, and I hope, obviously, this is a broader video for everybody, predominantly for Joe, because he sent that message in. I hope the information is helpful. And the two key takeaways from this is: one, take it absolutely seriously, and two, if you are absolutely going to go for this, you need the best equipment possible, right? The best equipment that you can afford. You don't need to go absolutely nuts. You don't need to go absolutely crazy to get the best of the best. The best way I can explain it is, an iPhone 14 will do the job. Do you know what I mean? You don't need to go and get the new iPhone 17, right? So I'll leave it there. I hope everyone's having an absolutely awesome day. Don't forget to give me a follow, and I look forward to speaking to you soon. Ciao for now.